Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Justin Bernier, founding partner of National Security Index, to discuss an index that invests in emerging markets without compromising U.S. national security and human rights interests. Justin, it's great to have you with us. Welcome to Trade Talks.
Jill, thanks for having me.
You got to give us a more holistic view of what NSI seeks to do.
NSI seeks to offer emerging markets exposure to American investors without harming U.S. national security and human rights interests. So right now, if you want to invest in emerging markets, there's all sorts of bad actors that are out there, including Chinese defense firms, companies that have been sanctioned for human rights violations, slave labor in particular against the Uyghurs. And you can't really get away from that unless you're going to rip all of China out of your emerging markets fund. So what we said is, rather than just try to do emerging markets 100% without China, and rather than accept all the bad actors inside of the big index funds, let's find a third way that offers that traditional exposure to emerging markets, but without the human rights abusers and without the Chinese defense firms and other hostile entities.
Now, the national security governance investing process is behind NSI, and that's modeled on the U.S. intelligence cycle. Tell us more about that methodology and how it's applied to the index.
Jill, we have 9 different screens that remove companies through a very systematic approach that mirrors the intelligence community's cycle. So we look at all the open source information that's available, we connect the dots, we find out which companies own which companies, and then we pull them out. So examples of screens are, I mentioned, is this a Chinese defense firm? Is it a human rights abuser? But also, is it stealing nuclear technology from the US? Is it part of a dual use, what's called a national torch program inside of China, where they're using, say, AI for military purposes? So there's a lot of different things that we're looking at, 9 different screens. One screen is, are they participating in the buildup of the military facilities and islands in the South China Sea in disputed waters? Because those are islands that would be putting US naval ships at risk in the event of a crisis. So we go through these 9 screens. We take out the bad actor companies, then we rebalance the emerging markets index sector neutral, and we end up with a very traditional EM approach, but that's clean for American investors so they can rest easy that they're not doing anything that's going to put American troops in danger or compromise their national security interests.
What are some examples of bad actor companies?
Right, we got a few. CSSC is China State Shipbuilding Corporation. They're the company that makes China's aircraft carriers. So if you own any of the big index funds that are out there now, odds are that you hold this type of company. This is a company that is sanctioned by the US, but that doesn't prevent US investors from sending them money. It's kind of a crazy system. There's no sanctions harmonization. Another example would be China National Nuclear Corporation. This is the actual company that manages China's nuclear weapons program. And so their subsidiaries are inside of the big emerging market index funds, and you're actually paying to make nuclear reactors in China that are being used to spin off plutonium that's being used for the nuclear warheads that are armed on the missiles that can reach the continental United States. So we have CNNC, which is building breeder reactors, which is reactors that produce more plutonium than they need to actually generate power. And that's going right into the nuclear warhead program of the Chinese. You're investing in these things if you own the big EM index funds today.
Right, which is interesting. You brought up a point earlier that it sounds as if the US and other Western nations are placing sanctions on the states themselves, but that's not preventing private money from going into these companies, which I would imagine many of them are state-run. So it sounds as if there's still sources of American and Western money going into the country, even though the headlines might say, we're sanctioning China as an example.
Right. So these companies may not be able to get full access to US technology, which is where the sanctions come in, but there are no capital controls on outbound investment to these corporations and their parent companies. It's actually quite insane. The same applies for human rights. So GCL, which produces solar panels, they use slave labor, Uyghur slave labor, and a lot of folks today know about the genocide that's going on in Xinjiang province. Well, that company's not allowed to send its products into the United States but we can send money to that company to help finance it. It's totally insane. These human rights abusers under the Uyghur Forced Labor Prevention Act, even though Congress has gone out of their way to sanction them and not allow them into U.S. markets, they are all over the U.S. index funds, all over the big ones that you can name, which make up 85% of the index funds out there for emerging markets.
So how do you see investment managers leveraging the NSI? Will they use that as an additional screen or an overlay to extract those companies from their portfolio?
Yes, a couple of ways. One, it's a replacement. So you don't have to change your correlations or figure out a different way to invest in EM. You can just take out the EM funds that are not doing these screens and plug in NSI. The other thing it's going to do, though, it's going to reduce idiosyncratic risk over time, so company risk, because we are taking out the companies that are most likely to be sanctioned in the event of a crisis with China or another hostile actor. So these Chinese defense firms, think about it. If we were to have a flare up in the Taiwan Strait, we could have a situation where all those companies were thrown out of US capital markets and the value went to zero. This happened when Russia invaded Ukraine. So if you were holding a lot of those Russian stocks, you got hurt as an investor.
All right, Justin, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.